Good morning, everybody. I'm Mark Windrum, the FBAA State Manager for the West Coast and Central Australia, and thanks for joining us on this very, very special edition of Q&A with Whitey, but without the man himself this time. It is on leave this week, so myself and Leah Brenwick, the East Coast State Manager, are taking it over this week. Pete will not know what has hit him. Now, I hope everyone's got their cover. I've got my West Coast Eagles 2018 Premiership mug this morning for this very special occasion, but my wife has not actually baked me anything, and she's actually got the week off this week, so a little bit disappointed about that. Now, before I pass over to Leah to speak about our guests, I will just mention our sponsors. We do have this week ALI, Bluestone, Finstro, Prosper, Lend, Suncorp, On Deck, Pep Money, AAMC, Strive Financial, Insurance Advisor Net, Credit Fix Solutions, and Trailbook Loans. Now, they all have very good value adds to your business, so please do reach out to them if you need them. And if you do have any questions about our sponsors, please reach out to Mark. I'm reading my name off the screen at the moment, myself or Leah. Now, this morning's guests, we do have a variety of aggregator BDMs. Now, we've just scoured the country long and hard over the last couple of weeks to get the cream of the crop. So we're starting off with Andrew DeLeangelo from Choice in South Australia. We've got Steve Harris from SFG in WA, which is where I'm being from today. We've got Dan Crowther from AFG in Queensland. We've also got Patrick Moore from Loan Market. Now, I'll hand over to Leah to get some of the questions started.
Hey, Mark. Thanks, guys, and welcome, everybody. Good morning. If I can just ask our panelists if they can turn their cameras on for me and join us. This morning, we've got Ange on, we've got Patty on, we've got Dan on, and Steve's joining us as well this morning. Good morning, guys, and thanks for joining us. This is a first for me being on my couch. Literally, I don't ever sit in my recliners, but Pete did the whole, you know what, be comfortable with today, and I'm actually sitting in my recliner at home. So welcoming our audience into my lounge room as well, which is a little bit awkward. But guys, where I wanted to kick off, because a quick game's always a good game, is something that's probably close to me, because I know how hard we all work within the industry, and by no means do we have a 9-to-5 job. So I'm going to start, because of the way my screen's set, I'm going to start with Ange because it's a girl thing. But just if you can share with our audience today a little bit more about you and what, I suppose, after 5 p.m, if there is ever an after 5 p.m, what makes you tick outside of work, and is there anything that you do that perhaps your brokers aren't aware of away from the office?
I don't know whether they're not aware, but I after 5. Let's make it after 8:30, shall we? I love to cook, so a lot of my brokers know me for my famous banana bread. When I pop round to the office, I bring banana bread with me. Now, because I love to cook, I do go to the gym about 6 times a week just to counteract all the eating that I do. And I'm probably renowned, and a lot of brokers do ring me to ask what the new restaurants are out there as well. So I love to wine and dine with all my friends. So that's what I get to do when I finish work after 8:30, 9 o'clock. So yeah, that's me.
Awesome. Dan, I'm going to jump down to you. Obviously, you're in my home state, Queensland. So outside of the 9-to-5 or the 9-to-8 or the 9-till-10, where do we find Dan?
Yeah, it's a little bit, most people know that I do triathlon, or I've been doing triathlons for 20 years. It's sort of an on and off love affair in the last 5 years, of being in all honesty. Those people that know me well know that, you know, some months I walk in and I'm 95 kilos, and other months I come in and I'm 76. So I've got a bit of a love-hate relationship with beer and food and the weight gain. But I think the other thing that I'm really passionate about is my brother and I started the Sunshine Coast Marathon roughly 8 years ago now. So we now have that, the Brisbane Marathon and the Cairns Marathon. And our events are charity-based events. So in the last 8 years, we've raised between ourselves and the participants about $1.5 million that have gone back into charities all around Australia. So that sort of makes me tick, and I basically do all the operations on those sort of things. So if you see a marquee planted somewhere on the day, that's me. If you see a traffic manager somewhere on the day, that's me. So I do a lot of the operations that's in behind all those events. So it's probably, you know, adding more to my 9 to 5, and that takes me through till midnight, three months of the year. But it's something that I really enjoy.
Awesome. So Mariah and I should look out in the future that you may step into the event space, and hell, you could be running the FBAA National Conference. No?
No, thank you. No,
Right,
I've got enough on. Yeah, no, I'm happy doing just enough at the moment.
Well, good. Stevie over in Perth. For you, after 9 to 5, 9 to 8, 9 till 10, where do we find Steve?
Thanks, Leah, and also thank you very much to the FBAA for the opportunity. Just one point of clarification, whilst I am based in WA with Mark, I think I indicated at our practice session that in no way, shape or form, just because I'm from WA, do we have to barrack for the Eagles or the Dockers. It is definitely, I'm a Geelong supporter and always have been a Geelong supporter, so all good there. Listen, I think unlike Dan, I've played a lot of hockey in my career, and I still do, and I'm probably suffering for that at the moment. I have no knees, but I still enjoy, as soon as I get home, normally about 5:30, 6-ish, I live in a lovely suburb in Burns Beach, which is a coastal suburb, and I enjoy going for a walk with my wife basically every night. We're doing that, and I think that's probably come from my father, who at 85 still goes for a run every morning at 85, and still plays a game of tennis on a Tuesday and a Wednesday. And there was one particular year that he went down and actually measured the temperature of the ocean. He swam out 100 metres every day of the year and measured the temperature of the ocean, including Christmas Day. So I don't think I'll ever get to that, but that's the sort of pedigree I've got, I guess. But also just one thing, Leah, apart from my after 5, obviously in WA we're very, very fortunate at the moment, and I do feel for the people over east, in particular Victoria. I had a PD day the other day, and speaking to some Victorian, you can really hear it in their voices that you know, it's very, very difficult over there. So certainly my heart goes out to you guys, and stay strong.
Oh, and that's awesome. And it is important to recognise our Melbourne colleagues that are on the call today with what's happening down there as well. And I think from all of us that are on this call and everybody that's sitting behind the background, we are all standing strong with Victoria and everything that's happening down there, and any levels of support that you can reach out to either myself or Mark, and also any of the team that are on the call. Any of your BDMs are there to help in any way, shape or form that we can. Unlike Ange though, I can't cook a good banana bread. It's something I have failed at for most of my life. I'm a little bit jealous because Mark's now looking after South Australia, so I'm going to miss out on banana bread. But yeah, it's a devastating point because it is my favourite.
This is a definite up for me.
So last but not, what was that, Mark?
I can't cook at all.
So last but not least is our Patrick up here in Queensland with us as well from Lone Market. Patty, after working hours, I'm going to veto now the hours that we actually work. After working hours, where do we find Patty other than the local pub?
I guess my life follows a bit of a whatever's important in that time is where my hobbies seem to lie. So recently I've been planning a wedding that we've recently called off. However, as part of a regular Sunday experience, I've been learning how to dance. Now, for anyone in Queensland who's seen me at any conferences, that probably surprises you because you've probably realised how great of a natural dancer I am. But that's something that I'm actually quite enjoying and getting a lot better at as we go. As well as a bit of fitness for the wedding shred, I'm trying to get down to Dan's maximum weight of 95. So maybe I can get some tips from you, Dan, on how I can get down that low. And I have a bit of mat Pilates during the week as well with a private instructor. So a bit of mat Pilates and some dancing is probably things that people don't know about me.
So, Taddy, I'm going to go with the dancing thing because, like most people watching today, I took up ballroom 2 years ago, I think it was now, and coming from being a netballer of 35 years, stepping into the ballroom space, it resembles watching a baby elephant take the dance floor. Where are you with dancing? Are you just dancing for the wedding? Are you dancing rock and roll, bit of ballroom?
It's just a bit of a contemporary mix. So we are doing a performance, which does involve some lifts, some dips, and a twirl by myself because I demand star of my own wedding. But we're also going, and on Sundays they do an open in Queensland. Obviously, we're able to still catch up in groups. So they do group lessons. So I've learned a bit of bachata and some salsa as well. So adding some of that Spanish flair to my steps.
Well, I'm looking forward to that for the next conference. I really, next conference, I now humbly request that Patrick takes centre stage on our dance floor come July next year. So you've got plenty of time to practice and get it right.
I'd be grateful for the opportunity to perform for the whole FBAA at the conference.
Okay, Marky, I'm going to hand over to you for question number 2 for our crew today.
Absolutely. Now, it wouldn't be a webinar without a reference to COVID at all. So now, obviously, stepping into the, absolutely during COVID, post-COVID era, being quite a digital-based platform, what does your company offer brokers in this space? We'll start off with Steve as well on this one.
Thanks, Mark. I guess from SFG's point of view, we were quite fortunate to already have a platform underway, underway for a couple of years, where we had the ability to actually video conference our clients. Not too sure about the other aggregators. I'm sure you have something similar, but I believe it has helped us enormously with regards to IDing clients and being able to, I guess, not visit them. And I've noticed even Bank West over here recently is requiring clients to hold an ID up next to them and get it photographed and whatever. So we were pretty okay with it all in that regard as a SFG national bonus. But I guess also in WA we are fortunate where we can still visit our clients. So it hasn't really affected us too much over here. But I guess it's really in regard to the software, the ability that has assisted our brokers there, Mark.
Thanks very much, Steve. How about yourselves with AFG, Dan?
Yeah, fairly similar to Steve and SFG. And like you said, I think most of the aggregators were pretty well positioned in this space to start with. I think, we talk about the word pivoting, we hear a lot, but the reality is I don't think the brokers pivoted. I think we were ready, and I think it was more on the funders to actually get themselves to a point where they were happy with accepting that type of, online type webinar or Zoom or Skype type meeting. And as Steve said, again, it's really just using any sort of format that you want. We don't prescribe to our brokers what they do and don't use, but they can just then save that straight to the Flex file and have the ability to have that conversation recorded, and then also you can come back and actually get hold of it at any particular point in time. So yeah, look, I think we were ready to go, in all honesty, and didn't have to do too much with way of our brokers on that side. The other thing that we did do is we built a COVID page, so a landing page. So any new updates that were coming through from our funders, from the industry, we made it very easily and accessible for our brokers to go to understand where things are at. And then, weekly and fortnightly webinars with regular updates around what job keeper, what job seeker, the tax implications, and also, superannuation and early access and those type of things. We're keeping them well abreast and well informed.
I think that's the most important thing. It was really just making the information so easily accessible to brokers. There were so many other things to worry about at that point in time, especially at the start. And unfortunately, where we're at in Victoria at the moment is just getting that information that is going to be easy, quick, able to be given to clients, and off you go. But also, dragging the verification of identity out of the dark ages, the amount of lenders that spoke to me saying, oh, we had this in the plan for the next 12 months or whatever it might be. Well, it certainly brought that forward immediately, and the sky has not fallen in just yet about verification of identity online. So let's hope it continues a long way. Angela, how about yourselves over there?
Yep. So we're exactly the same as Dan and Steve. So we'd always push it back to whatever the lender requirements are. So if the lender was accepting of it, we'd accept it as well. So again, the same as Dan and Steve there.
Cool. Patrick, anything else you'd like to add?
I think it was interesting from my point of view with the change in COVID. It was also the time that I started with Loan Market, coming out of the lender space. So moving from lender to aggregator at the start of COVID was quite interesting. And at Loan Market, we were really probably advanced on our path to utilising technology from a compliance point of view in line with the bid changes that were coming. So we've really tried to, I guess, get our head start around bid and what that looked like in terms of integrating technology to make compliance easier for our brokers, understanding the extra requirements that are going to be a part of that. And I think COVID for us sped up that process quite a lot. So a lot of the tools that we're integrating as part of our software to make it a better client experience and a safer experience for our brokers, COVID just sped up that process for us. You know, in line with Dan as well, getting on the front foot and in front of brokers was probably our key focus as well. So when we're not driving around because everyone was sort of confined to their houses, you were able to zoom into brokers, and I think the touch points were a lot stronger and faster through that point of view. And that's important, right? When anyone's worried or concerned about what's happening, being the face, getting in front of them and showing them that you actually support them through this time is probably something that COVID sped up for us, but it was definitely a journey, like everyone said, that we were already on.
Yeah, excellent. And that's the thing, in going forward, when we do get out of this COVID period, it's going to be a good mix of, you know, getting things online, but then going things face to face as well. I think it's going to be a good, effective use of time, but also doing the old-fashioned things well that everybody's craving for at the moment, for sure. Over to you, Leah.
So, Patty, I just want to pick up from, obviously we've left off with you, but I'll continue the conversation going along from there. Now, without this turning into, I'm going to say, something similar to last night's fight between Sue and Horn, what would be the standout for Loan Market? And the question's going to go across the board as well. So I'll get everybody just to chip in at the everyone else's, but where would be the standout for Loan Market in today's market?
I think there's probably two parts to that, Leah. So first part would 100% be the tech improvements we've made in line with bid, making it a better customer experience and a safer experience for our brokers. And the other part is me. And what I mean by that is it's about feet on the ground. So we have a 1 to 50 ratio with our brokers. And so by having that high touch, high support method, we're really able to help our brokers grow, not just on how they do. So a lot of brokers understand how to write a loan. Our job is to help guide them as to how to grow their business and how to improve their business. And that's probably where I see us stand out.
Perfect. Dan, I'll hand over to you from AFG side of things. Give me the standouts.
Yeah, fairly similar to Pat on that side of the fence. We changed our model last year and now have portfolio managers that are dedicated to looking after their existing groups. They'll come out, work with you. As Pat says, most brokers can put a loan together, but actually finding a deal. So they'll work with you to identify the gaps and how to actually go out and have a discussion with a referrer, as an example, and help you with your business planning around how do I grow from 1 mil to 2 mil to 3 mil to 4 mil. Conversely to that, there are some brokers out there, believe it or not, that are happy to shrink. So they've currently got a couple of brokers at the moment, and then over the next 2 to 3 years, they don't want the headache of actually having a few brokers on there. So what does their business look like, and how do they transition from an actively large business into a business where they're potentially just looking after themselves and comfortably doing that 2 mil a month? So our guys have been upskilled and trained in that space. Secondly to that, our compliance side of the fence, we've got some very, very, very good compliance managers, and our technology, what we call, is compliant by design. If you follow the process, there's just literally no way, unless you are not doing the right thing with the notes that you're adding there around the customer's requirements, objectives, that you can come unstuck. Perfect. And Steve, from SFG's side of things, because obviously you've grown quite quickly over the last 2 to 3 years, where are you stand out to the marketplace?
Thanks, Leah. It's always good to almost go last, isn't it, when you can hear everyone else's comments, but I wholeheartedly agree. We're obviously going to tick our software. I think that's extremely important, and we made a decision probably a couple of years ago to change over to SFG Connect, and we're just finding that's winning us a lot of business. Very, very powerful software system, but also interested in Dan's comments there, and I have got a similar case at the moment. We're assisting one of our first initial brokers. I think it was in probably our first 3 that joined us So we're coming up to about 25 years in business now. He's been running that really, really well, got a huge trail, but really concerned as to how that may drop off. And the bank's concerned as how is he managing that trail once he sort of basically retires. So one of our young and upcoming brokers, he saw that. I've given him the opportunity to sit down, meet with him. They've signed a referral agreement, so any new business that this older broker now obtains, he refers that off. That new broker obtains and keeps the upfront, and the older broker keeps the trail running. So it's just a really interesting transition business, Dan, and thank you for reminding me of that. I guess we're privately owned as well. It's a big tick for us, where we're very, very accessible. Myself, William Lockett, the CEO, sits upstairs there. And the brokers can call him at any stage. And we've also got a lot of financial backing to our brokers. If they want to get a business started or maybe do up their office or get a PA involved, we'll assist with some no interest finance for them. So I guess that helps a little bit. Thanks, Leah.
Perfect. And Ange, over to you from Choice side of things. Where do you see your standout products and how does like the typical day-to-day for you guys? So where is that standout niche space for Choice?
Yep, I guess with Choice, it's all about support, not just from, I guess, your partnership managers, but from the whole national team. We have spent quite a bit of money on our new Podium Reimagined, and we've also started integrating the bid process. So as of July this year, our brokers have been able to already start the new bid experience and are way ahead of, the 1st of January starting point. But I guess what we're most proud about is the collaboration that we have from our members and the way they support each other and share advice. So I think we do that really well. And brokers seem to, trust other brokers and learn from other brokers. So that's one of our standout at Choice.
And I do think we see a lot of that through the likes of the pop-up groups coming on social media, being Financing Coffee, Australian Mortgage Mart. We're seeing state-based stuff come up now. So I think it is important to recognise that brokers do reach out through other brokers for advice. And there are times that, at 9:30 at night when they can't reach a BDM, that they will post up in those groups as well. So it is really important to recognise the great support work that brokers are out there doing for each other as well. And I think, Mark, you've obviously been with us since March this year. Where do you see the standout for us at the moment?
Oh, just everything that we do, Leah, of course. But the really big thing that I've noticed from the time that I've been with the association is that we have our brokers' interests at heart in everything we do, and then that's the biggest thing that I love talking to brokers about is that you can talk to me about anything and there's going to be no judgment. You can just talk to me and have a whinge about something if you want, and I will be completely independent and I'll give my 2 cents to you about it. And people are really appreciative of that. And I think it's such a great thing that we do. All of our sponsors that we've obviously talked about today are what they can add to our brokers' business. That is the best thing. We've got some really good products that we have for sponsors that I just can't believe we've got them on board, to be honest. I think they're really, really good, and I just love talking to them for sure. Now I'll be asking the question. I'll be asking the questions now. Thank you very much, Leah. Now we've got something that's obviously been a bit of a flavour of the last few months, SLAs at the moment. Now, they're basically a new normal in some regards, you would have to say. How brokers can work with these? This is a big question. Do they just kind of get over it and just have to deal with it, or what kind of options that brokers can actually give to people? We'll start with Patrick this time.
I think it's a really interesting time, and I actually think COVID has actually impacted a few things from this. So I guess my point of view is we're pulling a lot of data now in terms of turnaround times of what we're setting from lodged to approved, and providing that data back to both our lender BDMs and our brokers, so they have an understanding of not just what the advertised SLA is, but what the actual SLA is by the time the deal goes through. I think there's a few parts to the journey in terms of where we're on at the moment. First part is I think COVID has limited our ability to build the connections that we were building in a pre-COVID world with our lender BDM partners. So I've definitely noticed that from a relationship standpoint, I think that those relationships aren't as close as what they once were. I think secondly, with the pace that the policy is changing from a lender point of view, what we're seeing is that something that was fitting the box yesterday doesn't quite fit the box today. And without having the close engagement with our BDMs, we're putting the deal through, thinking it's going to go through one touch, and we're finding stuff that I could have submitted it the same way yesterday and it wasn't coming the same way through. I think the opportunity probably exists on both sides of the fence to answer your question or to give you a solution, Mark. I think it's 100% imperative on our lending partners that they get in front of our brokers and are providing the right levels of education so that our brokers know how to submit the deals correctly. But then I think it's also on us to remember that, you know, we need to engage with those BDMs and have a relationship with them so that when we require them, we can work with them to help actually get those deals across the line and speed that up. I think the other final piece for me is probably use your feet to choose where you go. E.g., if we've got something that's blowing out and it's not quite right and there's an amazing cashback offer and we're still throwing every single deal into that lender, well then we've got to appreciate that advertising those turnaround times aren't there. Let's use our feet when it's time to choose what's right for the customer as well. And in terms of best interest duty, I think that plays a part in terms of what that looks like as well, in terms of it's in the best interest of the client to get the loan approved.
Absolutely. And, you know, going back to one of your points about the goalpost moving, this isn't something that the BDMs want to be going out to a broker with. You know, I've had a couple of chats with some BDMs this week, and you know, there's been policy changes that haven't been honoured. There hasn't been a bit of a lead in time or anything like that, and you know, it's just as frustrating for the BDMs that are having to enforce these new policies than it is for the brokers that are writing the loans as well. And you know, it really is something that they don't want to have these conversations, but they're going to have to, and they've got to fight the good fight for their employer. But you know, it is what it is with credit policies changing for sure. And what about yourself, Dan? Any thoughts on that?
Yeah, look, I think Patrick's covered most of it quite well there. Look, the reality is that some banks are struggling more than others, and others are going really well. So those ones that have adopted a digital approach are working out really well for their customers. You know, under the best interest duty, you really need to be doing, you know, we're coming up to that in 1 January. We really need to be prepping for that now, and our brokers need to be getting their heads around what does that mean for a customer, and it's not always the best rate. So look, if a customer's willing to wait 30 days to get a reply on a cashback offer, well then set the expectation and then don't try and pester the BDM too much, because the reality is we've got these advertised rates. I think one of the things that we do at AFG very well is similar to what Patrick was saying, but we have a report that when you go and do a product comparison report and it brings back all the matches of what product's available to a customer, we'll match against that the lodgement to conditional time approval timeframes. And we use the data that comes back through Flex. So you know, if we're doing a certain amount of loans with a bank on a monthly basis, we've got the data sitting there, so we can actually provide that to our brokers to give them a bit of an understanding as to where those SLAs are at, instead of them needing to go out to, you know, multiple sources to try and find what a bank's turnaround times are at that given point in time. So look, and like Pat said, you know, it's voting with your feet. It's not always about being the cheapest rate and selling that to the customer. It's about selling what's in the best interest of that customer at that particular point in time. And if the best interest for that customer happens to be 10 bips more, or you don't get a $1,500 rebate, well then, you know, you have the conversation, you note the recommendation, and then the client makes the decision based on the recommendations that you've put forward. The reality is that's what best interest duty does.
Dan, can I just add into that part, Dan? Are you seeing a lot from AFG's side of things though, and look, this could be across the board, where although we turn around and say that there's high SLAs with lenders, we're actually finding there's a lot more incomplete submissions and applications going in as well. So we've gone from a day where the expectation of 100% completed application to having some cheeky people out there that think that it's okay to submit at 85 or 90%. But what they don't realise is that necessarily doesn't hold their place within that lender queue.
Well, what we know is it doesn't hold the place in the lender queue. Most lenders touch that file if they do a deferment, or, you know, some of them are straight out declining at the moment. If you haven't put the right information in, you're not holding your place. You're going back to the back of the queue, and then you're impacting your customer on that side of the fence. We are seeing that with the changes being made and banks coming out quite quickly saying, well, we need this extra form, or this box wasn't ticked around, have you had the COVID questions and those sort of things, that some of the delays are on our side of the fence, and that we need to understand what they are. The flip side is the communication around the changes, and how well the banks and also us as the aggregators and yourselves as the industry body communicate those changes. So like I said, we've got that COVID landing page and we're updating that daily. So for our brokers, they can go in and see any particular change that's been made. So if a bank says to us, well, there's a new form that somebody needs to now fill out around these 5 questions around COVID, we've got one particular place where a broker can go and find all that information, understand it, and then progress with the file. Unfortunately though, you can lead a horse to water, but, you know, we can't always make them drink. So, but there is a lot going on. You know, if you've got accreditations of 40 lenders and everybody's moving, it really is hard to try and stay up to date. Back to Pat's point before, you know, communicating with the BDMs as well. If you're not sure, you know, send them an email, give them a call. Email's probably better for them at the moment. They're probably getting 1,000 phone calls, but even rely on your aggregator BDM or your partnership manager, or, you know, Financing Coffee or another broker. Have those conversations before you submit the deal. It might take you an extra hour up front, could save you 20 days down the long run.
That's it, Dan. I mean, there's so many people you can talk to in this industry that are going to be able to help you. And that's the biggest thing. You know, you've got aggregators, you've got us, you've got the lender BDMs. You know, there's so many sources of information now that you can go to. People are going to help because they want to help, and that's the biggest thing. Ange, any thoughts on SLAs at all?
Look, we're seeing I guess a switch to the lenders that our brokers are using. So we're just seeing so much more of a variety of lenders that are popping up for loans that are being submitted. So it's a huge opportunity for all lenders out there at the moment, which is great. While we're on this call, we're actually doing our, we do bid sessions with our brokers every fortnight. And we're actually doing one at the moment is around making an individual assessment. So it's all about this, you know, it doesn't need to be the cheapest rate for the customer. You also have to talk about the turnaround times. You have to talk about, you know, the individual circumstances of that customer. So I think brokers feel like they always have to quote the cheapest rate or the best cashback out there. So we're just trying to change the mindset of our members that it's not all about that for the customers and their best interests. So, and again, what Patrick and Dan had said, communication, that's the biggest key. Communicating with your BDMs. You know, your BDMs are so important. You need to keep them on side and work with them. So, you know, we're always installing that into our brokers as well.
There's a specific part of the regulatory guide that talks about the fact that if there is a long SLA, it's not all about cost. So
yep.
The specific recommendation in the regulatory guide, I've read it, don't read it all at once, read it in certain parts. It makes it a little bit more palatable, but it is a very good read. There are really good case studies that are actually in there as well that make things very easy to understand. And there's probably, I think, 15 or 16 off the top of my head, I can't remember now. But it's a really good publication that ASIC put out for what their interpretation of the bid is as well. But going back to your point about the range of different products, you know, it's given people, I think, a good opportunity to go for those smaller lenders or different ones that they might have not gone through. And they're going to learn the ropes on how to submit a loan application through that particular lender and all these types of things. So, you know, there's so many good things that come out from a negative when, okay, I don't want to put it through X that's taking 40 days to look at a loan. I can go through somewhere it's going to take 3 days. It might take me a couple of times to get the actual hang of it, but I'm then going to be a much better broker because then I've actually learned how to do a new product and things like that. So there's so many opportunities out there. Anything else, Steve?
Thanks, Mark. Mate, if you reckon that's a really good read, you need to get a life, mate. Because seriously, the bid, yeah, it is. Well, it's not a good read, but it's
highlighting everything.
Yeah, I do skim through that bit, but I do enjoy the actual stories and yeah, really interesting read. Guys, most of you said it. The only thing I would like to add to the SLAs is where the actual pressure is coming from, and I believe it's really to do with education to make it a little bit easier for us, because obviously each deal has got a client. It's probably relevant that there may be a real estate agent in there and also a settlement agent. So I guess if a particular client is adamant in chasing perhaps a 2,000 or a 3,000 rebate or a better interest rate, we just need to educate them and say, look, we'll go through this with you, but hey guys, this could be 90 days before this particular deal settles. So let's go for the ride. And also the real estate agents that expect brokers to get a finance approval in 21 days need to get a reality check, because we've had instances over here where agents are threatening brokers that, their particular client is going to lose the block or they're going to lose the house. And to me, it's ridiculous. That's not the environment we're in at the moment. So any of my brokers who are, doing this sort of loans, I'm just saying, educate them first. Don't promise over deliver, and we should be okay in that regard. And again, communicating. We've had a huge problem with one of our lenders over here in their turnaround times. I believe they just got out of control. But we organised a broker workshop, which was really, really good. Some of our, I think there was wasn't just our brokers, there were other aggregator brokers there as well. They went and met with this particular lender, explained their problems, and one of the major problems was they were taking that long. By the time they were up for new pay slips, they put the pay slip back and put it back in queue. Something simple like that, the lender didn't get, and we quickly, fixed that little thing. But again, what Angela has said there, absolute communication, and not just, I guess, to the BDMs who, hand on heart, they're struggling at the moment as well. They are working until midnight most nights. I've got one of my BDMs from a big bank who spent all weekend in the credit section, just purely seeing what loans were coming through and the problems that they were having. And one of the big takeouts was the COVID questions weren't being answered. I had a chat to Dan about this last week, and perhaps, maybe those questions aren't in apply online. If that's the case, we need to know. Reach out to your aggregators and we'll get that sorted. But I guess it's a real, guys, those BDMs are human, they've got families. I feel for them. So, be professional, don't take it out on them. It's all money. I understand the importance of it, but education for me is a big one.
And I think, Mark, from our side as well, the one thing that I'd like to make brokers aware of, we are aware of the SLAs that are out there. Pete has been bombarded with emails, and not in a bad sense, that it just keeps us alert as to what's happening. Without naming banks in particular, we've had instances where, we've been made aware that an application's gone in January and it was formally approved in June. I've just had a recent one, the application went in April and they got the formal approval on Tuesday. So there are a lot of things out there happening. And like Mark said earlier, everything is moving at a pace that it's hard to keep up with. Steve hit the nail on the head though with your BDMs. Just try and remember that we're going through the pressures as well. It is hard out there, and it's not sort of preaching to everybody. The behind the scenes to the industry from my side is like as running a secondary group, which is BDM Voice, is we've now had 86 BDMs made redundant or stood down within the industry. So your BDM that may have been there 3 months ago may now not be there. So we're all sort of trying to keep up at an extreme pace at the moment, which I think that question will also lead me into the next one for it, as to how the team sees the residential market within Australia and also the applicable states. Now, noting obviously we don't have New South Wales and Vic on the call at the moment, but the team that we have on today are experienced in all areas of Australia. So guys, if I can start with Daniel this time. Dan, if you just want to go through how you're seeing the state from AFG's side of things and where you see things potentially nationally as well.
Yeah, look, it's an interesting question. I think Queensland's in a fairly solid place, you know, for a number of years with the highs and lows that we get down at our southern states. Queensland just has a trajectory, you know, of property prices on a slight upward curve. We have a lack of stock on the market at the moment. I was up in Cairns a couple of weeks ago, so there's even a lack of stock up there. But interestingly enough, Cairns is now the busiest airport in Australia. So, you know, there's a number of movement of people around Queensland still. Talking to a number of agents on the Gold Coast and Sunshine Coast, because I've got a lot of ties around there, we're starting to field a lot of inquiries from our southern counterparts. So those people that were potentially looking at that tree change or sea change are really now starting to look into how do they actually make that occur once they're able to leave their particular states, or once the COVID thing, you know, starts to slow down. The reality is with the shift to working from home, I think a lot more of us are going to continue to probably work from home in the future. I know our office here in Queensland at the moment is more of a virtual office as opposed to a physical location, and we may look to potentially continue that into the future. So we may end up with some sort of office space somewhere, but it might not be what it was only 3 to 6 months ago. You know, so if we look at down in New South Wales, again, I think there's a lack of stock down there. We're seeing a lot of first home buyers sort of coming into the market. You know, the home builders kicked up a lot of interest, but the reality is we know with home builder, it's been sold one way, and how the banks can actually utilise the funds are being looked at in a different way. So, you know, someone who's a first home buyer with a minimum deposit under first home loan deposit scheme potentially may have been looking at that 25 grand as being able to use as funds to complete, but the reality is at the moment, most of the funders out there aren't taking that. So we can still get them in under that first home loan deposit. But the secondary thing to that is those spots fill pretty quickly. We saw the majors fill very quickly. You know, for those other smaller funders on there, the number of spots, the 10,000 or the 8,000 that were left, there's not many of those left. We saw my state the other day say, look, we're busy enough. We've got enough of those funds coming in the door now, and we're pulling back on that. So there's a few funders still out there who are looking in that space. Look, the reality is right now, there's people out there buying. There's a lot of people doing refinance and consolidation, getting their finances in order and hoping to get outside of the COVID bubble once we get to a point of continued movement. Look, there's a lot of unemployment down south, so that still is a bit of a concern as to what's potentially going to happen in those markets down there, especially with the secondary lockdown in Victoria that's going on right now. If I come back to Queensland, I think if we don't have another second wave, I think the government's trying to manage it as best that they possibly can. Some people agree, some people don't, but it is what it is. If we don't get that secondary wave, I think we'll be okay. But I really do sort of feel, I think, more so for the southern counterparts and what may actually happen. What we do know is those people with money, the luxury sales, are actually going full steam ahead. It's incredible what's happening in that space. And some of those larger, really high sought after areas or high sought after properties are moving at a rapid pace. They're coming on and going a lot quicker than what they were. Look, reality is I think Queensland will be okay from my own personal opinion, from everything I'm hearing and seeing. I think we'll have a bit of an influx of stock in spring. I think some people have pulled back a little. Do I think property prices off the back of that will be hurt? No, I don't think so. If we have a secondary wave, that then could potentially impact.
Definitely. And look, I think from our side of things, from the FBAA's office as well, we've moved into a new working environment. So as much as we are completely operational, we've got a team that's now factoring 1 week on, 1 week off. So this is a whole new world for our internal team as well. For Mark, I suppose the likes of Mark and myself, we both do work remotely from the office, but it does create a different sense of things because you're out there in the community. And I know in my local community on social media, there's been a lot more call to action for brokers from the consumer. We do see a lot of posts going up now for people asking recommendations for brokers. And I think that the consumer mindset has changed since lockdown as well. So I think there's a good pushback there for brokers within community groups as well. Steve, I'm going to hand over to you. How do you see things tracking at the moment for the residential market?
Leah, over here, I can't speak too much about Eastern States. I'll leave that to the other guys there. But over in WA, what we're finding, Mark would probably agree, that the regional areas are going absolutely nuts. Obviously, we're still able to travel, and we're looking at places up north like Exmouth, Broome, and then we've got down south in Margaret Rivers and Busselton's. Speaking to a valuer the other day, they just cannot keep up. There's a lot of people that maybe FIFOs who were going down there, staying a couple of weeks, are now looking at actually making that their permanent residence. As far as the sort of, I guess, the Perth metro area, we're still seeing not growth, but certainly not a depletion. And stock is pretty limited at the moment, and also the rental market. I mean, if I mention Exmouth in one of the regional areas, you cannot get a rental property up there at the moment. And I'm speaking from personal. I've got a property up there, looking at going up there for a holiday. Basically got to stay in a bloody footy field. That's how it's going up there at the moment, where a small country town can hold about 8,000 during the breaks, and up there at the moment they're trying to filter through about 20,000 people. So everyone is just getting in their cars and driving around WA. At the moment, the biggest stock that's going through the roof in WA is caravans. Speaking to a guy that does personal loans for caravans, he can't keep up. He cannot keep up with personal loans on caravans. So regional areas in WA are fantastic. Rentals are pretty hard to come by. And again, whilst we're not going down, we're certainly stabilising. So I think we're okay. It's been a ride, but it hasn't been that bad over here at the moment. All good.
So I think that's a great thing for Perth as well, with you guys coming obviously out of where we had that hold in Perth for the last sort of 2 years on the residential market. I think it's been a fantastic thing. You've come into a COVID market, and you've kind of got into that situation now that it hasn't kind of pulled back, it hasn't sat stationary. There's other areas that are helping you shift into things moving forward as well. So I actually think that's brilliant for Perth. Mark, you want to add to that from over in Perth?
Yeah, oh look, the funny thing was all the FIFOs on their swings back when they weren't working were all going up to Bali to have their week or two off, and they can't obviously go there anymore. So they're staying in WA and going to the regional areas instead to have their time off, and again using kind of those rentals, short stay rentals to keep all their stuff in, all those sorts of things as well. It's a big shift, and I saw a couple of weeks ago, Broome is just busy as anything at the moment. You can't get bookings for restaurants or midweek and all that type of stuff. And obviously now is the time to go up to Broome because it's lovely and warm up there. But it's just going absolutely gangbusters. They're short on staff because they haven't got all the tourists working up there and things like that as well. So it's going gangbusters in the regional areas. In the metro area, we've obviously got the builders grants that are stimulating the economy big time, even more so I think than some other states, and that's creating a lot of activity. With the fact that the funds aren't being used for funds to complete, I think there is a positive for it for the kind of wide-ranging economy where the funds will be used towards October, November, December this year when the grants are actually paid, and people are going to be able to buy Christmas presents and big screen TVs and the like. So there are a lot more kind of positives to. It was policy on the fly, let's be honest, but I think it will work out quite well for the wider economy. It's not just pumping money into a particular industry, even though the construction industry does have so many different types of employees that are involved. So much employment comes from it, which is a great thing, but it is going to work out, I think, well through like a quasi, another $900 or whatever you want to call it for the rest of the community. You just have to buy a new bill for it instead.
I love it. And for you guys over in South Australia, it's been a bit different because you've had your borders locked, you've had them open, you've had them closed, you're about to reopen them again for New South Wales. How's it heading for you guys down there, other than really cold at the best of times?
It is gorgeous today. I think we've got 19 degrees and there's not one cloud in the sky out there. It's just a beautiful day here in South Australia. Look, Leah, to tell you the truth, we're actually really astounded with the figures for our resi brokers. They're doing such a great job, and that's nationally. So we've just started noticing Victoria, probably in the last 2 weeks, the numbers have started slowing down. And I guess that's because a lot of people can't go to the open inspections. But all the other states, like I said, we're really astounded with how well all the brokers are doing. And South Australia, our house prices have just started creeping up, which is great. So we're going to shout that out. Same with Tasmania, house prices have started going up. And with the new construction grant, we're starting to see a problem here where the builders that sort of fit in that price range that the government stipulated have reached capacity. So a lot of them have said, sorry, we can't sign any more contracts. So I know we're working with the government there to try and find out whether we can actually extend the part of the construction. So that's our problem here in South Australia at the moment. We've got all these incentives, but not enough people to fill those. So yeah, all going well here.
Awesome. And Patty, down to obviously in Queensland again, but with the loan market having a national presence, same as AFG, how are you guys seeing things from the residential forefront?
I think it's interesting from my point of view, given the Ray White is part of our group as well. Talking to the Ray White guys earlier, clearance rates or days on market within 15 k's of Brisbane CBD is under 35 days. But Dan's 100% correct. Stock is low, consumer sentiment is high, people want to buy. The agents are telling me that if you're wanting to sell in Queensland, now is a good time to sell because it's certainly there. In terms of, I guess, prices and opportunity for broker, I think prices have been pretty stable. We're moving into a period in Queensland, especially when it comes to spring and winter. Queenslanders get really wussy and just hide at home under the blankets and don't want to do anything. And then I'll openly admit that. And then as stuff starts to warm up for us, we start getting back out there. So spring for us really is the catalyst for the property market. I think it was interesting having so many of my brokers in Ray White offices or joint venturing with Ray White businesses enabled us during the COVID time to probably shift it away from purchase and onto the refi. And what we really targeted was leveraging that relationship to assist the landlords market. And that enabled us to hit record numbers in Queensland 3 months in a row in terms of settlements. So, you know, the real estate relationship is key. Purchases are still happening, they're limited, but the real opportunity is if you can engage the right referral partners, you know, which we have great access to through Ray White, then you're able to still find that refi business, and rates have never been lower for a lot of them. If they haven't had their rates reviewed as an investor in the last 12 to 18 months, we're helping them. And you know, helping investors at a time where stuff's a bit tighter from a COVID perspective, and everyone's watching their dollars, is certainly been really important. And we've had that stability in Queensland of the valuations remaining firm, but no, definitely looking upside. If you want to sell and you're in Queensland, put it on the market. Now's the time to go.
I know how you try to sit there and say to everybody, just sell everything, just don't move out of Queensland, just sell it, but don't move out. And look, the same thing happened for a girlfriend of mine. Her property wasn't even on the market. It's a 1-bedroom unit in New Farm. And she had a tenant in it where the real estate actually rang and said, look, we've got someone that wants to make an offer. She purchased that from memory 6 years ago, and she's just made $200,000 on the purchase price. So, you know, it's surreal coming from Sydney myself originally to coming into a Queensland market and seeing how things move so quickly up here. You know, sometimes you feel like your head's going to spin. I know for myself, you know, I've had the luxury within this job that I've been able to travel around a lot of Australia, where a lot of the people listening today would be used to seeing me drop in on states, and it is phenomenal being able to go, okay, we're in a lockdown situation, but we're still seeing the real estate market move. And you know, my first thoughts, and I'll be honest, in March, April this year, I had the cloud of doom hanging over me. And did think September was going to be one of those months that we just look back and went, shit, what happened? To where we're at now going, you know what, this isn't bad yet. I'm not going to say that I have a crystal ball that can see into, you know, the November, December, January mark. But I think we've come through this a lot better than what the forecasters were originally expecting as well. So, Mark, I don't know if you're on the same boat with that, if you feel the same way with that. How are you sort of seeing it from going forward from here?
Oh, absolutely. I mean, there was all the doom and gloom at the start of COVID. You know, the property prices going to go down by 40%, all these types of things as well. And it hasn't happened. Not to say that it can't happen in the future, but you know, it's been a tough time out there. Could it be worse? You know, we look at other parts of the world and go, you know, definitely it could have been a hell of a lot worse. So, you know, we're still not through it. We've got to really think about the guys in Victoria, but you know, it could be a lot worse in a lot of ways as well. And you know, we're very lucky to be where we are, and very lucky to be in an industry that has so many outlets for support as well. Now, we've got one more question left. Now, we are running out of time. It is 4 minutes to go, so we're just going to have to really look at some short, sharp answers on this one. Now, digital documents versus snail mail. Now, this is something that Pete came out about yesterday as well and put some media out. Now, what are your thoughts around the grounds? We'll start with Ange again on this one.
Digital docs, well, as of this weekend, with the new statement of credit assistance, that's now going to be able to be a DocuSign and then saved back into our system. So we're moving quickly with that at the moment. And I know some of our lenders are, there's a couple of lenders that have popped up where do it all digitally now from right through to the end. So that's definitely something that is full speed as well.
And it's something that's been pulled and yanked out of the 20th century big time, but it's been that little bit more of a longer process. And I think fair enough for than what BOI was. Patrick, anything else?
I think one of the issues we have in Queensland is obviously that the mortgage documents still need to be signed manually. And I know there's a lot of lobbying coming from the likes of the FBAA on that front to try and progress government bodies to move faster. And I think that's probably a highlight knowing it's happening. I think COVID has set up lenders being more willing to accept some of those lender-based, those electronic-based documents. I think that's probably played to our advantage, but the rate of change in regard to acceptance of that probably still needs a bit of work from some of the lenders out there. But I think it's definitely, it can only be a positive from my point of view. With the FBAA championing the cause, I think it's really good to see when we can come together as aggregators and as industry bodies to actually position change in our industry. And I think it's something that I really loved after the Hayne review was the way that aggregators and industry have never been closer, and that really allows us to influence that change and make a key difference. So I guess I'm excited for the future, and I'm pretty sure we're on the right path to it.
Dan, anything else?
Just echo Pat's thoughts on that, my mate. I think the Combined Industry Forum is doing an absolutely wonderful job for our industry, and I think on the back of you've got banks with legacy systems as well, so some of their changes aren't going to happen as quickly as what we'd like to see. Some of them still run Siebel, which was made in God knows when Jesus played fullback or something like that in reality. So, trying to get those guys to get their systems up to speed to be able to accept all these things. Look, in Queensland, our hands are tied. We still need a wet signature for land title. So the reality is until we can get our government to that. Funnily enough, I used to live in New Zealand about 6 or 7 years ago, and it's been a digital process over there for God knows how long. So while we can't adopt it and move forward, I don't know. Exactly. So, I mean, I'm married to a Kiwi, mate, so I get ribbed all the time. Not only that, I don't think we won a game of union against him in about 23 years. So it's not fun in my household during those periods.
And last but not least, Steve, anything else to add? I mean, obviously here in WA, we've got wet signatures still as well.
Yeah, I think in the essence of time, I think everyone sort of answered that question, Mark. But I mean, all I can say is our systems are up and ready to go for obviously the DocuSign and EduSign. So I guess there's not a lot we can do, really, is it? And I know Dan said the Pine Industry Forum, the Aggregators Forum, we're all working to make it easier for our brokers. So we will get there. I mean, if some of the lenders are already doing it, we're not that far behind from getting away from the snail mail. And in particular, the mortgage documents are the biggest drain, aren't they? But we're all working on it.
All the legal type of stuff, isn't it?
Yeah.
Everyone really just is worried to just go and sign off on these things. To really, they're going to fear about
it's not only lenders.
Illegal, all these sorts of things. I remember at the start of 2020, there was issues with just writing 20 on the date. So you could put 2019 on the date, and then it could be a forged date and all these sorts of things. And that was just oh God, we're actually doing this. But you can probably see from various points of view where there could be some big legal issues. But there you go. Now, Leah, anything else that you'd like to add on that?
Yes. Look, from that side of things, I just think we've got to progress as an industry in a manner that, okay, look, we know that we haven't completely moved to digital yet, and it's a yet that we put around that. So I go back to a while ago when I started in the industry, like cave in that with a while ago, 20 odd years ago. We could turn a deal in 3 days. And I just think that throughout the course of time, because lending has changed so many parameters and there's so many different ways now of doing a home loan, of doing an offset, of adding in accounts, of doing this. Now you've got COVID questions. It's become a very complicated system. And unfortunately, we've got a balance of some states, like Dan said, living in Queensland, we're a wet signature, some states that are happy with digital. We've moved into COVID. I don't know if everyone else is like me. I get updates almost daily from Australia Post saying, hey, we've got issues. We're at 150%, where this time last year we were at 73%. We've got problems out there that we can't fix. We would like to be able to say, hey, here's the magic wand, I'll wave it, it's fixed, not going to happen. But I think going forward, the more noise we make with governments about it, and we're blessed obviously with Pete having a lobbying license with the government, we're able to get a voice in there directly to be able to say, hey, what have we got to do to help make this move forward over time? Being mindful of time as well and knowing we're on the 12:30 mark, I'm going to skip through a couple of questions that we've obviously already addressed for the audience in the questions we've asked earlier. I'm going to head into one from Peter Sorgel, and I think I'm going to caveat this one with a treading with caution, and it's to all of our aggregators on there, and I love the laughing faces. So guys, Pete's turned around and said, should a lender be able to cancel your accreditation if you've not submitted a loan with them during a 12-month period? And I might add to that as well of minimum requirements from certain lenders, where we would hope that the benchmark, especially during COVID, has been assessed and looked at, where some brokers may not be reaching a $2 or $3 million mark. So I'm going to hand it first to Steve. We'll start over on Perth's side of things. Do you think it's acceptable that a lender does cancel accreditation? And on the minimum volume requirement side of things, where do you see that heading to?
Thanks, Leah. Absolutely not. To cancel an accreditation for no reason is no good. However, I will say I believe it's a good thing to maybe do some sort of refresher course, but not to cancel. I believe, give us a month's notice. Hey, Mark, we've noticed that you haven't put any business our way for 12 months. Would you like to do this refresher course? And then it doesn't get cancelled, but it gets reinstated. And we've got to be careful with that cancellation of accreditations, because it can affect your PI insurance, and also as an aggregator as well. I know there is a little dot point there with regards to has it been cancelled due to lack of deals and stuff, but it just doesn't sit well with me at all. And especially with bid coming up, we don't want to go down that way.
Perfect. And over to you, NSA.
Yep, so I thought it was my understanding that all lenders have to notify the aggregators now when they're considering down the path of cancelling the accreditation. So I know with quite a few of our lenders, they let us know a month in advance that they've sent out the e-learning to the broker. They haven't completed it. The list comes back to us as partnership managers, and then we get in touch with those brokers and get them to make sure they do their e-learning so it's not cancelled. Now, we have a few ACL holders as well as part of our members, so that will affect them getting re-accredited if that bank has an issue with the ACL that they haven't completed the questions that they needed to be an accredited ACL with them. So we're pretty hot on that, and we make sure that our brokers always complete the e-learning, and I think that's a great thing for them. So, they are familiar with that lender's products and policies and everything. So I just see it No, I don't agree that it should be cancelled, and I'm pretty sure they're not being automatically cancelled anymore, but I think that happened last year.
Perfect. Dan, down to you. Quick game's good game.
Yeah, look, agree with Steve and Ange on that side of the fence. Cancelling, no. I think if, you know, they're doing a 12 or 18 month refresher course to understand what the products are about, under best interest duty, if a bank's out there cancelling an accreditation or removing accreditation, how can I as a broker then be acting in the best interest of my customer? Secondly to that, you know, most of us have fairly extensive lending panels. And let's say there's 40 or 50 funders on a panel, we've got 40 or 50 accreditations. It's up to us to go and do the research when a customer comes to us with their requirements and objectives, and then we go away and find the right solution. So the right solution isn't, I have to send the minimum amount of deals to your bank on a yearly basis to retain my accreditation. The right solution under best interest duty is to find the right product for that customer at that particular point in time. And if you're not in the market at that point in time, whether it's turnaround times, interest rates, cost, fees, whatever it is, then it's your job as a lender to get in the market. So to remove them, no. Refresher course is fine. I don't have a problem with that. Just staying up to date. But the reality is most brokers will certainly go out, and I think they're the best, some of the best researchers that are getting around in the roles that they play for a customer. And that's what they do. They go out and they find the right solution. You're not going to know 40 policies off the top of your head. And if you do, more power to you, because I certainly can't remember that many.
Brilliant. Patty, down to you.
Can I be somewhat controversial, Leah? I somewhat agree and somewhat disagree with the other panelists.
Ex-lender.
Patrick, just remember we're over time. We don't have the next hour for this one.
I think with best interest duty coming, I think I've got two sides to it. I probably agree that there doesn't need to be a minimum, but if I'm not writing enough deals with X bank, how under best interest duty can I conduct the appropriate research to be able to make the recommendation that I need to make? You know, to the guy's point, is a refresher course enough to withhold it? You know, I don't do a deal with X bank for 3 years, but I've done an annual refresher course. I question whether I really understand the product enough to make my recommendations fully. I probably see it on the other side of the fence a little bit on that side. Look, I don't think there should be a minimum amount, because that obviously flies in the face of doing the right thing by the customer. But I think there does need to be an interim gap there where we go, hey, how can I make sure that my understanding of the product and features of this loan meet my customer objectives, and therefore I can make the recommendation, as opposed to, you know, we've got 65 lenders on panel. You know, how do I know all those if I'm not writing with those on a regular basis? What does that look like, and what does that training module look like?
Definitely agree. And guys, just to wrap it all up for today, I mean, there is probably another 10 questions sitting here at the moment that we'd love to cover off with you, but mindful of time, and obviously with quite a bit that's happening within the industry today. We've got the Business Accelerator this afternoon happening with Momentum. So I'm going to wrap it up here and say thank you to everybody for your time today, and obviously to my counterpart Mark over in WA as well. I really appreciate the fact that we've grabbed you guys for an hour, which I know is hard, and I'm sure that if you showed everybody your phones at the moment, there'd be quite a few missed calls sitting on there. So I do thank you guys for joining us today. Again, Ange D'Angelo from Choice, Steve Ayres from SFG, Dan Carruthers from AFG, Patty Moore from Loan Market. Guys, it's a big thank you from us. From the FBAA side of things, as we said earlier, Mark and I are running wild for at least the next week without Pete, so feel free to get in contact with either both of us for any inquiries that you may have at the moment. We're here to help when we can. Coming up for the FBAA though, guys, something to be mindful of is we're moving the Q&A for Whitey session into the 10th of September, being Are You OK Day, and a reminder to everybody that it's okay to not be okay. Get Broker Fit is an initiative to get brokers' mindset set into the right place and obviously help you with your mental health. And we've got some fantastic speakers coming up in that as well. The link to registration's on your screen at the moment. You can also find it on the FBAA's website. If you click on webinars, scroll down the page and it'll come up as the next webinar available. Again, guys, I just wanted to say from our side of things, thank you very much for your time today. A massive shout out to our sponsors, ALI, Bluestone, Finstro, Prosper, Lend, Suncorp, OnDeck, Pepper Money, AAMC, Strive Financial, Insurance Advisor Net, Credit Fix Solutions and Trialbook Loans. Without all of them, this kind of thing wouldn't be able to get done at all. You'll also get an email in an hour from our wonderful event team who worked so hard to put these together, and a short feedback survey. If you can fill that in and shoot it back to us, it gives us a chance to be able to take on board what you guys would like to see more of in the future. You'll be able to also watch it back on the FBAA's YouTube channel. So it's a mouthful again. So guys, again, thank you very much for joining us today. We really do appreciate the fact that everybody's been able to take their time out. Again, if you've got any questions, even for the panelists from today's show, please send them through. We'll get them sent over to you as soon as possible. But from Mark and myself, it's bye for now, and thanks for joining us.